back. It is another day, another deluge of news and information. A lot of it is crazy, downright idiotic, imbecilic, moronic, bizarre, acutely mentally deficient, and worse, criminal from A to Z. Unlicensed Debbie Birx, Deb, is announcing she's retiring after showing her utter hypocrisy going on a Thanksgiving weekend trip when threatening everyone else not to. These people are incredible. It's not hypocrisy. It's they know the truth. There's nothing to worry about. Anyhow, you get it. Unlicensed Debbie Birx retiring. What is she retiring from if she's not licensed? Mike McGill is back with us tonight to talk about a number of things, including the $900 billion stimulus bill to help America recover and survive this terrible fraud plandemic, which in point of fact is giving billions to people who have no right getting a penny, including illegal invaders of this country who are going to get up to $1,800 apiece, while Americans get $600 apiece. And don't forget the millions going to Pakistan to help them pay for some asinine, absurd gender study. What are they doing with these bills? It's like every one of them is it's an empty truck for pork. There's a little bit of cargo on the front, then he's loaded up with pork all the way to the end of the trailer. It's truly sickening. I hate to say it, but I've never seen a more corrupt country. I've never seen a more corrupt country. I'll leave it at that. Hello, Michael. Welcome back.
Jeff, welcome. Thank you very much for welcoming us back, and also for all your fine listeners. Thank you very much for supporting us and everything. I don't know if you're getting breaking, just came across Zero Hedge. Trump vetoed this bill today. Just did, tonight.
I was waiting for the final on that. Good. We got it. Okay.
He just came through just as we speak. He is demanding a $2,000 stimulus per household per person versus his $600. I think his view is if you can send $1,800 to illegal immigrants, whereas a family of four, an American citizen would get $2,400. A family of four immigrants, adults in the same household, would get we have $7,200, or literally 3 times as much money. I think you just said screw it. The future's sold off tonight. He's selling off big time in the stock market tonight as we speak. This news, and that's just fine.
Wait a minute. Ask a question. What is the mental acuity involved with deciding to give an illegal invader of this country a penny? Why not give them a free ride to the border and throw their ass over the border and say, keep walking, don't come back?
I don't get it. Buying votes for the Democratic Party and nothing else. I was reading through this so-called Porkies you opened up the program with tonight, and it's just absolutely insane. There was money in there for gender studies in Pakistan. Israel got another free of $56 billion, naturally, right there at the top.
I think it was more than that. I think it was $500 million. That's what
maybe
I read.
It was $500
anyway.
million. Well, maybe it was. It was a massive amount. Maybe I read it wrong. There's so much stuff breaking across our desk every day. We can hardly keep track of it. I mean, literally, it's just
same thing.
It's really crazy, but just. Some of these things are like, first of all, a little background. Most people think, okay, these bills, what would that be? If you and I wrote a bill like that, it'd probably be 4 to 5 pages long with a few footnotes. Now, this one was a little more than that. It was put together in a matter of 3 or 4 days, and it had 5,900 some pages. 5,900 and some pages. and it was and the members of the House had no more than 2 to 3 hours to review it.
Nobody read it. Nobody.
Well, let me ask you a question. How long would it take, and how many writers and staff members would it take to literally compose that, on their electric typewriters,
weeks.
on their computers? Well, obviously, this thing must have been around for a long time then, huh? Because how could you create it? How long? It would take months to do it. Get 100 people doing that. That's an entire encyclopedia of laws. And just they have money there for to support. Here's one: $453 million to the Ukraine, which is a horribly corrupt country that our CIA created a coup there to support. We're going to give them another $453 million, $10 million for gender programs in Pakistan, $1.3 billion to Egypt, $700 billion to the Sudan, another wasteland of Arabic and warlord rule. What else do we have here? Here's one.
No one has gone through the whole thing to find all the outrage. It's buried in this stuff. $135 million to Burma.
That's right. Myanmar is called now, but Burma, it's a ruthless military dictatorship that's actually been killing some revolutionary both Buddhist and Muslims in that country. Absolutely ruthless. We gave them $135 billion. We have $85 billion
wait,
Cambodia.
$135 billion or million? Billion?
135 million, excuse me, wrong.
Okay.
135, I read it wrong, my fault. I misspoke. I'm like Hillary, I misspoke. 135 million to Burma, 85.5 million to Cambodia, 1.4 billion for an Asia Reassurance Initiative Act, and what is an Asia Reassurance Initiative Act?
I know, I read that last night. I still don't know.
There'll be 400 pages in that one. Who would know? $130 million to Nepal, and there's some other things here. It's just on and on.
Let me say one thing, Michael. Every bill that goes through generally has these kind of parasitic sellouts attached to them. Generally. They're there. They're a little here, a little there. This one is particularly egregious. But I think more than that, it was one that actually got looked at and people found these things. Some of these bills are,
they did.
Like you say, 5,900 pages. A lot of them are 5,000, 4,000, 3,000 pages and maybe more. And nobody reads them. They don't. Go ahead.
$208 million to upgrade the Census Bureau's computer system.
That's the least we could do.
Keep it twice the price. $40 million for the Kennedy Center and funding to discourage teenagers from drinking and hooking up, quote unquote.
Hooking up.
COVID relief bill provides $40 million for the Kennedy Center of the arts.
Got to have that.
Well,
that's
important. Here's one: $130 million for federal HIV/AIDS workers to buy cars and car insurance overseas and a feminist museum.
I hadn't heard of that one. That's good. By the way, Trump did not. Hold on, Trump didn't veto it. He's sending it back to Congress without a veto.
He's sending it back. I guess he didn't actually veto it. He's sending it back. He didn't accept it. He said, send it back and redo it. He didn't actually veto it. I just saw that. I got this. This was one of my sources here.
Just veto it? I don't know. I guess maybe... Yeah, whatever.
I'm sorry about this. What was it? Was it Feminist Library? Was that what it was? Did I say that? Feminist Museum. I have a
feminist museum. Really? A feminist museum. What country is that in?
They're going to have. I don't know what that's going to. It's hard to say. It's going to be overseas someplace.
Yeah.
In a collection of the museum. It doesn't go into. Well, there's so many lines in this thing. 6,000 pages. That reminds me, if you don't mind, I'm sharing a little joke with you I read on a cartoon years ago. One of the funniest cartoons I ever saw. The guy's name was basically a quadriplegic cartoonist. named, I'll think of his minute in a minute, John. He was right here in Portland. Very, very, one of the first beginning political cartoon. John, I'll get in a moment. His last name, Callahan is his name, Irish name. And the cartoon is a little man looking really nervous and kind of scared, and he's standing there in front of a big, tall desk, like a library, like a librarian's desk in a bookstore. Yeah. And there's this real kind of, what you might say, heavily masculine featured woman standing behind the desk, and she says, "Excuse me, sir." He says, "This is a feminist bookstore." The woman's reporting, he's asking her an inquiry, obviously, and her response is, and the caption is, "Excuse me, sir, this is a feminist bookstore, and there is no humor section." So I don't know, I just felt like sharing a little humor tonight, because everything else is so funny with this. So, you have, feminist bookstores, I guess we have feminist museums, and the government's going to pay for it, and they're going to borrow that money, $900 billion in circulation, of course.
Some tranny museums. Every town needs a tranny museum.
They do. You might as well laugh at this stuff because it's not going away. This is just continuous insanity. This is not to be outdone. Last week, the European Central Bank, under their new leadership of, she wasn't in charge of the IMF. I got a mind blank tonight. I've done a lot of physical work today. I'm a little slow. I'll think of her name in a minute. I can't recall. But they just announced nearly 600 billion euro. Well, that's pretty close to almost 900 billion of more bond purchases for sovereign debt in Europe to keep that house of cards alive. So between these two central banks, they've cooked up $2 trillion of more liquidity. I mean, what that really means, translation, when you say liquidity, it means counterfeiting, a debasement of the currencies into the world system, which is going to be good for hard assets. And this is just continues to continue. Along those lines, what is happening with the bond market? The bond market is 3 or 4 times bigger than equity markets. It's enormous. There's so many trillions in it, nobody knows. And there's some very fascinating things that are happening with the bond market here. Here's a couple. Let me see. This is just pulled this off today. Maybe it was yesterday. Just a second here. I'm going to get it. This come off Zero Hedge. In the whole world, of all kinds of bonds, on average, sovereign bonds, municipal bonds, and corporate bonds worldwide, it's probably inclusively 100 trillion or more. Check this out. This is what you do when you drop interest rates to nothing. That the only 15% of all global bonds in $100 trillion plus market has yields over 2%. This is impossible. Inflation is running in real terms 2 to 10%. Who's buying these?
And with what? And for what?
There's very few investors buying them. The central banks of the world are creating their own money.
Ex nihilo. Monopoly money
means electronic credits literally typed on a computer and counterfeited into circulation to buy these bonds. This is just staggering. This continues. There's a couple more points on this that are really amazing. Just one more thing, if I could find out real quickly. If I can't, I'll get it back. I had it highlighted. Here we go. Out of this 15% of all global bonds above 2%, only 10% are above 3%, and negative yield bonds that pay nothing. In fact, they charge you to lend them money. Now they have gone to $18.5 trillion, up from, in the last 7-8 weeks from your show here, like September, they were around 17 trillion, 16.5 to 17. They're now about $18.5 trillion. So this has never happened, of course, in the history of the world. When you lend money out, you expect to be paid for the privilege of your capital of taking that risk. Well, now the risk is on the lender entirely to these $18.5 trillion of negative yield bonds. This is beyond crazy, and it's going to end in a debacle that nobody can even imagine. We stand by that. And, the stock market, it's going to lead to hyperinflation. It is leading to inflation now. On the show I touched on briefly last year, all commodities are up very strongly. All major mineral groups, steel, nickel, copper, cobalt, anything that has an industrial basis is up 20 to 65% in the last 6 months and going higher. That's going to start showing up in the price of finished products, copper tubing, automobile, hoods and cars, things like that. So commodities are beginning to respond finally to this insane money printing, which is just completely off the graph. And people say, well, the stock market is really high right now. Stock market's all-time high. Well, in Zimbabwe, where they have trillion-dollar bills, there are millions of people in that country, and in Venezuela too, that are millionaires in their stock. They're stockholders and they're millionaires. Except it takes 400 and almost 500 million currency units, bolivars, in Venezuelan currency to buy 1 ounce of gold. So their accounts are worth mega millions of dollars. When you cash them all in, you might be able to buy 3 ounces of gold with it or something like that. So just because stock markets are increasing temporarily in value does not mean at all that there's actual valuation in these shares in the final analysis when it's all said and done. And that's something that people are not looking at all. So here is a couple of more things I wanted to share real briefly, if I can sneak it in. Do I have a minute or two before the break here? Is that possible or not?
Yeah.
Okay, I'll make this quick. Price to book value of stock. Book value means cash on hand, machinery, buildings, software that you have, I can't think tonight. You've created your own software, this kind of thing. Book value at the collapse of the NASDAQ. The NASDAQ 100 collapsed in the dot-com crash in March of 2000. The NASDAQ subsequently lost 83% of its value. At that time, the NASDAQ 100 index stock price to book value average the crash was 20 to 1 of those shares, 20 times to 1. Now let's look at a couple examples recently. Tesla shares value 55 to 1 to book value. New Airbnb that just went public about a week and a half ago. They opened at $45 and something like that and closed at $140 the first day. Their value, their market value, their market cap, as they say, capitalization of their shares are trading at 235 to 1 to book value. A company that's never had a profitable quarter and has lost billions of dollars before they went public in the last 10 years they've been in business. This is a complete insanity. But their price to earnings values can be way worse than that. They can be thousands to 1. But even their book value, there's nothing there. In other words, these companies are, in many respects, are zombie companies. They carry nothing but debt, and they don't earn any profit. Yet those shares are driving up all the stock markets into the stratosphere. This week, at the beginning of the week, Tesla just joined the S&P 500. They're going to be equivalent to, I think, 1.7% of the whole S&P, which is a lot because there's 500 companies. They should be only 1/500% of that. But actually, they're going to be 1.7% of the value of the whole S&P. So there's been an incredible misskewing, if you will, to change the market evaluations of these indexes by loading them up with very expensive, super overvalued stocks. That's another reason that these indexes and exchange-traded funds attached to these indexes are soaring, because they're carrying shares comprising their indexes, which have outrageously exaggerated valuations, and that's skewing the whole mass market of the whole exchange, whether it's the NASDAQ, the S&P 500, the NICE, the New York Stock Exchange, or whatever. That's happening everywhere.
Yeah.
So,
All right, hold on. Oh, hold on a second. Got to pause here. Nancy, where's the story here? Nancy Pelosi says she plans to pull Donald Trump out of the White House by his hair. Donald, use the executive order and lock that wretch up, along with hundreds of others. Unbelievable.
Unbelievable.
Yeah. Hold on a sec. Be right back. This whole thing is really getting to be, honestly, we're into loopy land where money means nothing. They print as much of it as they want. There's no fiscal responsibility. They're throwing Band-Aids on things. It looks like snowflakes. They're just all over the place. It has to completely implode at some point soon. Does it not?
Yeah, it does. There's a couple other little statistics here that's going on. And another thing I didn't get a chance to mention on this bond fiasco worldwide. I can't emphasize to your listeners enough, Jeff, that the bond market rules the world, that and currencies. They're way more powerful and infinitely greater in economic daily trading amounts than all the stock markets of the planet combined.
Right.
We have the decline in the last 5 years for world bonds between 0 and 1%, which they're not negative, but they're just might as well be. They've increased from a total in the last 2 years. This is according to Jim Reed of Deutsche Bank, from 15.7% of total world bonds to a total of 44.7%. In other words, what we're saying is here, how in the world, most of the stability we know in the world, pension plans, they can't take big risks. They're having to force to now. In the past, when interest rates were 5, 6, 7%, pension plans bought municipal bonds or government bonds or very solid corporate bonds of some big solid company like General Motors, and there was enough yield in that their retirees could be paid their returns they need to fulfill the obligations of the pension plan. When you have interest rates between 0 and 1%, all companies, and that includes all insurance companies, casualty, life insurance, every insurance company in the world, and you look, I just read yesterday that Geico spends $1.65 billion a year just on advertising alone. Well, they're going to need a lot of advertising because they're going to need a lot more clients, but I don't think if they get the clients, I don't know if they can make any money. Because what do they do with this money? They invested in the bond market where they earned enough, in the past, earned enough money to make their profit. And they paid out their claims and the difference in their expenses and the difference of their long-held actuarial investments over time, and mostly in bonds of various sorts, made the difference of their profitability or loss. Now, none of those markets exist anywhere in the world. So this is basically then, this completely miscues risk entirely. And it drives malinvestment into anything that's incredibly speculative. You have to now, to survive, even even retirees, they have to speculate to make enough money to live on. They can't just live on a nice, cozy 6% in their savings account you could have done 25 years ago throughout your life. You can't do it for 20 more years after you retire. Now, the money, any cash declines in value monthly because of monetary inflation. And the risk to make any money at all, you have to take risk in explosive stocks. And we have a lot of clients, not a lot. We have some clients that got out of gold and silver because it wasn't moving fast enough, moved all their money into cannabis, not just a few, a couple of families, moved into cannabis. One family moved into cannabis speculation and went to some seminars in San Diego, and they lost every penny. It was complete bogus. There is massive. There's a whole lot of right now boiler rooms, both on the telephone and in large meetings where they advertise, come in free, we'll buy you coffee and talk to you how you can get rich in about 6 months, by investing, and also in gold and silver. There is one
how
of
much
our
did
newer
those people
clients,
lose, Michael, in round numbers? Just approximately.
160,000, everything they had.
They should have put it in Bitcoin.
Yeah, they could have done it in Bitcoin temporarily, and that'd be fine. That makes more sense. But again, there's been a massive amount of fraud in the marijuana industry. There's all kinds of companies. The stocks are way down from when they went public. Way down. Some are just trading at a fraction of what their initial public offering value was. That's a real racket. Also circulating right now are high-powered new boiler rooms operating. They're going, and they have very high proprietary, probably stolen information. What they may have done is been able to hack accounts in, how can I say, in 401k and self-directed IRA company databases to get a hold of phone numbers of wealthy clients. And they use real high pressure salesmen going after them. We're trying to help a client reclaim some of this money who's come over with us, and he's already got his gold and silver, and he's buying more from this because he at least feels he'd be somebody he can trust. We wish we could have found each other back in June, because this company that pitched him really big, they set up office buildings right in Washington D.C. in the shadow of the White House in the Ronald Reagan building, and had suites there. So you'd think, they're in Washington D.C. They're right on Pennsylvania Avenue, so they got to be good, right? Well, no, they're not. They were complete fraud, and they used fraudulent wholesalers and everything else, and they have been shut down. Are now being sued by Attorney General of Texas. They haven't yet indicted them for criminal. It's a civil suit for losses to clients, and this all started since last summer, just this year. It's got going good in June, I understand, for $150 million plus. Okay, this client we had lost about $235,000 to them. These people don't even have a Google Pages ad up, so you can look at reviews for them. And their web page only has one page that doesn't operate. No phone number, no address, just a name. And then as you go into it, some very flashy,
Mike,
advertising, just boilerplate.
I have a question. Are any of these people looking for an honest-to-God, solid business investment, or are they looking for pie-in-the-sky fantasy island dreams that are being sold to them? I know of there are good businesses out there. There are good businesses that these people can pull in $100,000, $200,000 a year without risking everything, and I don't understand what's wrong with them.
I don't know either.
We have
a client called us, a potential client called us today, for example, and said, my brother and I, he was a little busy, had to come back 3 times. We have $125,000 we'd like to invest in gold or silver and or platinum. What do you advise? So I spent about 30 minutes talking to him in 3 different phone calls. He had to keep calling me back. And then he told me when it was all over, Well, here's the deal. I don't want to hold this very long. I'm looking to hold it for about 3 to 4 months and then sell it. In other words, I want to ride this big wave up in gold and silver and maybe double my money here. At least he was talking that way, and I said, well, let's hold on a moment. I don't recommend you buy from us then. Or in fact, I don't recommend you buy at all from anybody if that's your intention, because we're going to be honest with you. Gold and silver is held for protection of your life savings and wealth in physical. You should own the core of that no matter how much money you want to make in the future. That's protection of wealth, protection for your life interest. It will appreciate dramatically. I mean, silver's up from a low of under 14 to nearly $25.50. So silver is almost doubled since March this year, and that's really great. But I said, that's unusual. I think it will move up. I'm looking for silver in the next couple of years to take it over $50 an ounce, but in 2 to 3 months. And there are a lot of people, a lot of dealers, if they told them that, what they told us today, they said, well, yeah, you probably will do that. Just buy from us, get your money to us right now. And we told them, actually, that's a false expectation. I mean, it might be better just to trade that in the futures market, if you want to, or in an exchange traded fund. You just look at it when it goes up a bit, you just sell it out. You can do it maybe with less premium than actually buying physical metals, although our premiums are just about the best in the world. So if you're looking just to purely speculate, just to make more money, then gold and silver is not designed for just
don't these people want don't these people want a monthly income from these huge investments, or are they just going to sit on them for 6 months to a year and try to flip them? What are they thinking?
The mindset is everything is flipping, basically, and or thinking you can get rich really quick. I mean, they have all these shows and flipping houses in real estate. I can't watch them because there's just I've been remodeling real estate for over 45 years, and it's complete. And the prices they claim to be able to do this stuff is a joke. I mean, I just can't even watch those things. They're just so fraudulent. It's just insane. Are you kidding me? And so it's the same thing. People have unreasonable expectations. Right now, there's a lot of what is called in the markets running around called FOMO, fear of missing out. People are jumping into Bitcoin like crazy because it's now over 22,000. Well, there's a site that I read daily, and I have a partial subscription to it called Technical Traders. And if any of your clients are interested, please call me and I'll tell you, how you can subscribe to it or read them. They're very helpful, and they're very prescient. In fact, I decided based on what I was following them April before last to enter gold and silver in long-term options that were way considerably out of the money, and we did really, really well. Now, what did we do with our money when we made our profit? We bought gold and silver with it in physical. And that's why I tell people it's fine to speculate in Bitcoin, but there is no intrinsic value in it. Yes, they say it's a limited amount of coins. Okay, so they can't be increased indefinitely. That's a good thing. That's similar to gold. There's a finite amount of gold in the world. All the gold that's ever been mined in the history of the human race fits in less than a 90-foot cube you could put in the middle of the infield at Yankee Stadium. True story. 6,000 years of gold, less than 90 feet by 90 feet by 90 feet. And there's just a little over 1% of that of that value is increased each year through very expensive mining. So that means it can never really be inflated away. Well, Bitcoin follows in that regard. It's somewhat similar to gold. The problem is what you're trading, and the best expression I've had is air in a can. The coins themselves, that was very brilliant. They called them coins. That was a brilliant idea. I have to say that. A great marketing idea. People that use their computers to create them, they're called miners. So obviously, the people that did this, there was a lot of good marketing in that. They tried to conflate, if you will, or associate the idea of the first cryptocurrency with mining gold or silver. This is interesting to me. But in what you're mining, there is no intrinsic value. It's a digital credit on a screen. Now, do I think there's some billionaire hedge funds now going into this, and that's okay. If you understand you could lose a lot, and or at some point in time before this market busted, it went up to almost 20,000 back in 2017 before Christmas and dropped all the way back down to nearly 2,000. It got killed. People that bought into that are just starting to make a little bit of money finally 3 years later, because most of them got so bummed out when they lost half their value, they sold out of it and lost all that money. That's what you do when you buy and chase tops of markets. You get killed. It's a terrible thing to do. Never, you miss a market, just say you missed it. Find another market. Our advice to people at trading: don't chase insane inflated markets. Okay, gold and silver are not nearly overinflated versus their intrinsic value. Silver right now, silver reached a high of $50 in February of 1980, and then almost the same amount in late April of 2011, 9 years ago. Well, in $1980 for silver to get back to $50 in 1980 evaluation, silver would have to reach about $180 an ounce. Okay, not $50, because the dollar is worth so much less than it was in 1980. It's lost about 80% of its value since then, at least. So in that regard, silver is extremely undervalued in terms of its previous highs, and therefore I think that silver is an excellent investment, and it's going to do extremely well in the future. I look for it definitely to take out the 50 high in the next 2 years, and then move into triple digits at some point here in the middle part of this decade, probably. So I think that's reasonable, and I don't have any problem buying a little bit of cryptocurrencies. I think you shouldn't have more than 5 or 10% of your assets in it, and if you do it, expect to lose it. And if you do it, also trade with what we say tight stops, risk 3 to 7% in your position. If you get taken out with that, then just liquidate automatically. Don't try to hope it comes back, that kind of idea. It's very volatile, and again, it's been hacked a lot. We think it has no intrinsic value, just like a U.S. dollar has no intrinsic value. It's actually a promissory note. It's a debt, actually. Right. It's only as good as the other is other people's willingness to take it and trade or purchase for something. It's a trading vehicle only, and that's what Bitcoin fundamentally is. It isn't a piece of real estate. It isn't a barrel of oil. It isn't lumber, which has gone up dramatically. It isn't a producing business. It's purely a speculation of some form of kind of artificial alternate currency that has no intrinsic value again. So this kind of idea, but in case, getting back to that, this technical traders, which I mentioned, and so I got little cicudas on you here, didn't mean to do that. They have two charts they put up of Bitcoin going up to 2017, 5 years before that, and now the last 3 or 4 years. These charts are so identical as far as not just the chart pattern, which looks like an exact copy. I mean, almost a carbon copy.
What does that tell you? What are you suggesting here?
Well, let me say more to that. The technicals, called the relative strength index, the momentum index called the MACD, and the fast and slow stochastics, which again, these are all indicate where a market is overbought, oversold, and or the momentum of buying and selling, are all completely, absolutely identical. So the technical trader guys, which we like very much and have made money with them and really respect them, they don't try to talk you into something, okay? They're very reasonably priced. They're arguing that this, from their perspective, this Bitcoin is getting set up again for a mammoth correction, literally at any day. Now, that might not happen.
My inside data is that it's going to go up and hit around 28, and then there will be a major profit sell-off. But then it'll come back again. So wait.
It's possible. It's really hard to say. Here is the thing. People people just have not been able to disabuse themselves of the idea that any form of paper or digital currency, artificial currency, is not real money. As Voltaire said, all paper currency eventually returns to its intrinsic value, ... namely zero. Yeah. And in the course of the human race, across all nations, since back to about 600 BC in China, there have been over 750 paper currencies in the world that have gone to completely zero value, including the Russian ruble back in the 90s, started over again. France has had 5 or 7, 10, over the course of all the Napoleons, all kinds of currency failures through Louis XIV, 15th, 16th, all the way through. It just goes on and on. There have been so many of them, nobody knows. I mean, I'm not exaggerating this. And this scheme, they do it again and again and again. And then the bankers, the people lose their money. They start a new country or a new banking system.
Oh, yeah.
And then the bankers work their way into it, and they do this again. They do it again. And it just
it always works. There's a sucker born every minute, every second. There's always endless supply of suckers. People who will be able to be talked into almost anything. They can. There are buzzwords and cliches and little psychological mental traps that people are patronized with and catered to with. They work. How? I don't know, but they do. They trigger things. It's not what they say, it's what they almost say. And they let the people connect the dots. And they can see nothing but wealth for themselves. Anyhow, it's disgusting.
Yeah, there is I was trying to see a Bank of England. I typed this wrong. There's a quote by. He was president of the Bank of England. Let's see if I can find it here. I just typed his name wrong. I'm trying to type with one hand. I can't even type with two hands, let alone one. So I'm sorry about that.
Why are you typing with one hand? Why are you typing with one hand?
Because I'm on the phone. I have a little headset and it's having issues, so I'm not on that. So hang on. Oh, here it is. Right. I have it here. I just found it. This is famous quote by Sir Joseph Stamp. He was president. He lived from 1880 to 1941. He was president of the Bank of England in the 20s.
Right.
He was considered to be the second richest man in Britain. Here's his quote. He went public. He just admitted it. He said, "Banking was conceived in iniquity and born in sin. The bankers own the earth. Take it away from them, but leave them the power to create deposits. And with a flick of a pen, they will create enough deposits to buy it back again. However, take it away from them, and all the great fortunes like mine will disappear, and they ought to disappear, for this will be a happier and better world to live in. But if you wish to remain the slaves of bankers and pay the cost of your own slavery, let them continue to create deposits." Now, how straight is that? This is essentially the Bank of England was the most important, powerful bank in the world. This would be like the Fed Chairman Powell making a statement like this today. Okay, meaning that this is one gigantic Ponzi takedown Bernie Madoff con job here, fractional reserve banking. It was designed that way. And if you read the famous book, The Creature from Jekyll Island by William G. Evergriven, he lays it out in 600 pages that exactly it was planned and created. They knew this would happen eventually. Knew they'd make it, keep it going for as long as possible. It could run for decades. It could run for hundreds of years. And didn't know. Eventually the whole thing would blow up, and all the people of all the citizens of the country and people invested in the U.S. dollar would lose everything they had and be reduced to serfs. But they didn't care because most of them were, frankly, very, very criminal Zionist bankers. There were a few that were not Zionists, but the quintessential players certainly were. The Schiffs, the Warburgs, the guy, and of course J.P. Morgan, he was nothing more than a client, really, of the Rothschilds. He was secretly with an agent of theirs working over here. They created this thing, and it's been robbing this nation ever since for so many trillions of dollars that if who can imagine? I mean, since Nixon went out the gold standard in 1971, the dollar against gold, against the value of gold, has lost 98% of its value since 1971. An ounce of gold was $35 an ounce. Now it's $865 an ounce. So just divide 35 to 1865 and see what you wind up with. And that's right now when you look at the dollar index, and they call them currency crosses, the value of the dollar as against the yen, or against the Swiss franc, or against the Australian dollar. Well, that's one thing. But that doesn't really say anything. That's like saying, let's say there's a ship crashes and there's 10 lifeboats in the ocean. They're all in bad shape and they're all taking on water, but some are taking on water a little slower or faster than others. Sometimes some of the people in the lifeboat get real energetic and start bailing real fast, and guess what? The boat goes up a little higher than the people that are lazier than the other lifeboats. And this is what the world currency market analogy is. I know it's a cheap one, but I like it. To me, it really describes what it is. That people keep evaluating how they're doing by all the other sinking lifeboats. We're just not sinking as fast as they are, or we're sinking faster than they are.
Take care.